Welcome back. This is Jeff from Mysteel's iron ore department, here to give you the latest on China's ferrous market. Let's dive in. China's ferrous market maintained strong momentum early last week, driven mainly by widespread rumors of production restrictions ahead of the National Military Parade and positive sentiment from the joint statement between China and the United States to extend the pause on tariffs for another 90 days. However, a swift downward correction followed as coking coal led the decline, largely due to a notice issued by the Dalian Commodity Exchange on trading limits for the 2601 coking coal contract, which significantly cooled speculative sentiment. This, combined with weakening steel fundamentals and the recent announcement that Japan will launch an anti-dumping investigation into steel products imported from South Korea and China, weighed on the ferrous market during this period. Steel fundamentals came under increasing pressure, with total inventories continuing to rise. In particular, existing steelmaking margins prompted an increase in total supply, but demand dropped further amid the ongoing off-peak season. Construction steel saw the most pronounced demand decline, while rising flat steel consumption offset part of the pressure. The joint statement between China and the United States helped ease concerns over fluctuations and uncertainties in foreign trade, stabilizing expectations for steel exports in the coming months. However, construction steel consumption is expected to deteriorate further due to the suspension of downstream projects in Beijing, Tianjin, and Hebei ahead of the military parade. If production restrictions fall short of expectations, rebar prices will likely face additional downward pressure as a result. Production from both mini mills and integrated mills edged higher on the back of healthy margins, which have generally bolstered the raw material markets. In particular, the sixth round of coke price hikes in the spot market was successfully implemented, with total coke inventories declining at a faster pace last week. Coking plant inventories have now fallen to their lowest level over the same period in nearly 3 years. Iron ore prices remained range-bound during this period, with overall fundamentals remaining steady. Demand for iron ore stayed firm, supported by still high hot metal output, while total portside inventories posted a marginal increase due to improved unloading efficiency. The cooling of speculative sentiment, coupled with weakening steel consumption, is likely to weigh on the domestic ferrous market. The market's direction in the near term will largely depend on both expectations for and the actual implementation of production cuts in late August, which could have a complex impact on both finished steel and raw material markets. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.